Welcome to
Hello and welcome to FarmBusinessConsulting.com's video on April 10th USDA WASDE report. I'm going to be going through some numbers that was released at the report at 10 a.m. Mountain Time here in Alberta. What we see happening is the USDA continues to increase corn ever so slightly. Report over report, and what that is tending to do is just keep the price in check from where the big drop off occurred on March 28th. So what we saw the USDA come in at was 0.757. What they're predicting their ending stocks is going to be in the States, and what March ending stocks were predicted to be was 0.632. So we see obviously an increase. Some funny things going on with the numbers though. Of course, this is the USDA. So, funny things often tend to happen with their reports, and sometimes it's a little bit difficult to believe everything that you you hear or read from the USDA as well. So I'm just trying to get my pen working here. Okay, so that's basically the corn number from the report. What we see here with soybeans is soybean ending stocks coming in at 0.125, right in line with what the March ending stocks projection was going to be. Here we obviously in between here we see the highs and lows. Most analysts in the States that I've been following are saying that it's sub 100. It's just the USDA has a personal mandate that they'll never say it's lower than 100 million bushels. But most analysts are saying that, and basis levels are reflecting it. It's the same in Canada. They can say whatever they want. Stats can say that there's 2 million metric ton of canola in the bins, but it's not out there, and the basis levels reflect that because they're trying to draw it out and get it sold. So wheat, of course, not very good news for wheat, as it seems usual in every report. I'll get into wheat a little bit more with what we have left in the bins. It's up from March. Again, with corn, it's surprising because the big word on the street was that corn, with the high price of $7 to $7.50, that was causing corn to go down, or corn usage to go down and being replaced by wheat, whether it be feed or ethanol. But yet we see wheat going up. So nobody seems to know where they're exactly getting these numbers from. And again, it's the USDA. You have to take it as a grain of salt, and the trade will obviously do what they want with it. Once we get into the once we get into the ending stocks of the world, then it's a different story. We see corn up as well in the world, basically coming from a few usage concerns out of China. We see beans up as well, and we see wheat up. So ending stocks are going to be higher in the world market, and going forward, that's going to be key to watch these numbers from the world ending stocks. The world production is where these stocks are coming from, and of course we see Brazil at 74. March was 72.5. Argentine beans, no adjustment there yet. Everybody on the ground in Argentina says it's below 50 million metric ton. Of course, their harvest isn't done just yet, so subsequent reports could change this number right here. This number, I believe, is probably accurate and set in stone, as Brazil had some pretty good numbers as well too. Sorry, that's on the corn front. The corn harvest is done, so we're just left with the beans yet. And Brazil was left the same as well with the bean ending stocks. So let me just clear all this because it's getting a little bit messy. Now, one thing we have to keep in mind going forward is, of course, like I said, the wheat market. And when we have high world ending stocks, it's called about 30% stocks to use ratio. And what this is getting into is, just hold on here. Here we go. Once we get into the wheat, we see basically that back in 10-11 year, it was 35%, 33 the subsequent year. March had us at 29.5 in the States, and now it was bumped up in April to 30% stocks to use. So basically this is saying there's going to be enough carry out that we could go a third of the year if there was a catastrophe and there was no wheat at all. It's pretty much the same scenario in the world market, although down from 4 years ago. But if you remember, the price of wheat in this year in the world market was right around $4.50 a bushel to $5. So when we see that number, I would suggest probably once we lock in the sales for this year's stuff is doing 25% of next year's sales at right around that 750 range. We could be kicking ourselves that we didn't up this more, and that'll be on a risk tolerance level per farmer, and depending on location that we're going into and other things. But really see wheat dropping this year. I believe we could see upwards around Minneapolis wheat around that 6 to maybe even 550 due to corn dropping down to 4 to 450. So that's still to be seen. There's going to be some opportunities for pricing. I'm not totally bearish on that front, just simply because there will be opportunities for pricing this year because we're not out of a weather market yet. So, but I mean, once we hit about mid-June, the weather market's come and gone. And, if you remember back in a few years ago, it was the Russian drought that hit in July that really drove wheat prices up. It wasn't anything to do in the U.S. So, again, stocks to use ratio corn, we're up from the last report, still down from last year at 7.9. It's going to be 6.8 this year. World to world, year over year, we're at 15% and 14.5, so not a big drop in corn stocks in the world. Once we get into beans, we see beans up 3% in the world market year to year, and in the USA down, still down 1.3%. And of course, when I talk about on the website, and I talk about the the problems that we've had with that I've had through the winter is with exports of soybeans, and that not being shown realistically in the USDA reports. And again, what I'm going to show you here is the exports that have been going aggressively on. It's updated tomorrow, Thursday. But what this is going to show is basically, the soybean exports, and why these numbers with the USDA are pretty hard to swallow, because, again, we see here just from last week's reporting, we're 10% higher than year-to-year ratio for bean exports. So this pretty much is showing us at this pace by this week's report or next week's report, all of the soybeans grown last year in the States will have been sold and exported. Don't see it. Either there has to be more stock, or they're out on their stocks number, or somebody's lying as to how much is being exported. I believe these numbers are going to be true because they're taken from the ports. So somewhere along the line, there's definitely a problem going forward with the soybean market in the States if they hit bad weather through the summer here as well too. So because remember in the March 28th report, soybean acres were actually down from year to year. So I'm not necessarily saying beans are out of the woods, but of course if everything else is going down, they're going to follow as well. So that being said, the next couple months is the growing season, growing here in North America, and anything that is said in this report can definitely be changed, but this is what the trade has to go off for the next month or so. So thanks for watching this, and the next report I'll have will be April 24th, will be the StatsCan seeded acreage report, which could be some interesting numbers coming out of that report as well. So thanks for tuning in, and we'll talk to you on the weekend.